While cryptocurrency serves as a medium of exchange, some countries have looked into adopting this technology into their economic system, but many countries are yet to adopt cryptocurrency. In this video, we check out the reasons why cryptocurrency may not be the future of money, as it was once pegged as where the future of money lies. Welcome to Digit Money, the community for money-related content. Number 1 is money laundering. Several experts suggest that cryptocurrencies provide criminal organizations with a new way to commit fraud, money laundering, and a host of other financial crimes. This criticism stems from cryptocurrency traders' ability to remain totally anonymous. Cryptocurrencies have been used for dark market sites, where criminals can buy and sell illegal items with little chance of being identified. Various governmental agencies have labeled drug dealers that exchange drugs for cryptocurrency as the new generation of criminals. In 2019, blockchain analytics firm Chainalysis estimated that criminal entities transacted $2.8 billion in Bitcoin exchanges, up from around $1 billion in 2018. Before criminals can convert their illegally acquired cryptocurrency into cash, they have to convert it first into liquid cash. The popular exchanges for this conversion are subject to anti-money laundering rules that require firms to identify their customers. But Chainalysis researchers suggested that criminals have found a way to circumnavigate these rules, using over-the-counter trading system. Another one is regulation challenges of cryptocurrency. The main challenge that cryptocurrency faces is that it is not regulated by any central authority. This means that there is no one to govern it and protect consumers from fraudulent activities. For example, if someone loses their money because another person stole their private key, then there is nothing that can be done about it because there is no central authority to turn to for help or support. There are also issues regarding taxation which need to be addressed when it comes to cryptocurrencies too, as they are not regulated by any government body. Then it can be tricky for people who want to work out how much tax they owe on their earnings from investing in them or trading them on a daily basis. In the third place, cryptocurrencies are very volatile. The price of Bitcoin has fallen by more than half since its peak in December 2017, and the value of other cryptocurrencies has dropped sharply as well. This is part of the reason that many people are hesitant to commit their savings to cryptocurrencies. They are worried that they might be left with nothing if the currency they invest in falls badly. The volatility challenge is actually not unique to cryptocurrency, and it is not insurmountable. Here are some strategies you can use to reduce your exposure to risk and still enjoy the benefits of investing in crypto. Number 1. Buy small amounts of a variety of coins, rather than large amounts of one coin. This way, if one coin collapses, you'll have others to fall back on. Number 2. Diversify among different coins that are similar but have different features and uses, like Ethereum, Litecoin, Monero, or Ripple. You're not likely going to lose everything if one of these coins strikes down. Finally, don't invest more than you can afford to lose, even if you diversify your investments across multiple currencies. Cryptocurrencies are very volatile and there's no guarantee that any investment will pay off, or even come close to paying off in the future. You could lose everything overnight if something goes wrong with the technology behind the currency. Please, I want you to go ahead and smash the like button for me. Subscribe and ring the bell to get notified anytime we upload new video, as we have bundles of great and quality contents coming up. Moving on, the fourth reason is the adoption rate of cryptocurrency. The adoption rate has been slow. This has been attributed to its volatility and the lack of regulations. The current market is also dominated by Bitcoin, which means that other cryptocurrencies have not been able to break through. The challenge facing the adoption of cryptocurrency is that people are unfamiliar with the technology. This has led to a lack of trust in the industry, especially among consumers. This lack of trust has led to fewer business sectors accepting cryptocurrency as a mode of payment as compared to fiat currency. Cryptocurrency transactions are irreversible, which means there is no way to reverse them. This makes it difficult for merchants to accept cryptocurrencies as a form of payment, since they do not want customers who may request refunds later on after making purchases using these currencies. The high transaction costs associated with cryptocurrencies makes them more expensive than other payment methods, such as credit cards or cashier checks, where you can get your money back if you are not satisfied with what you have bought from a vendor or sold on an auction site like eBay or Craigslist. There have also been cases where hackers have stolen millions worth of bitcoins from exchanges like Mt. Gox and Bitfinex. These has made people wary of using cryptocurrency as a form of payment online, but only time will tell if these fears will continue into the future. Finally, the biggest challenge for cryptocurrency is the data. The data in the cryptocurrency world is very different from the data in other parts of the world. In traditional finance, there is a centralized authority that sends you information about your bank balance at any time. However, in the cryptocurrency world, there is no centralized authority that sends you these kinds of messages. The second obstacle is modeling. It's not easy to model cryptocurrencies because they're very different from other markets. In contrast to stocks or bonds, which have long histories and can be easily modeled using techniques such as regression analysis, cryptocurrencies have much shorter histories and are not yet fully understood by financial researchers or computer scientists. I hope you enjoyed this video. If you found this video helpful, do let me know by giving this video a thumbs up and commenting below. Subscribe and ring the bell to get notified whenever we upload a new video. Thanks for watching.